Coming to you from the Windy City. Welcome to Let's Talk Shop, a podcast about all things cloud and enterprise tech. Listen to insights and guest interviews with IT thought leaders and professionals. Now, here's your host, Elias Khnaser.
Welcome everyone to another episode of Let's Talk Shop. This one is truly unique. I've got Munich Re, I've got Google Cloud, and we are going to talk about the very interesting, controversial sometimes, topic of cyber risk insurance. There's a ton of questions that I have. There's a ton of questions that I've received from all of you around this topic. It's a topic that's fluid. The market is still kind of discovering and evolving and maturing. But I'm hoping that today with our guests, we are going to get a ton of answers. So Helga, Bob, Monica, welcome.
Thanks. Happy to be here.
Thank you so much.
Just so folks know who's everyone, can we maybe do a very quick round of introductions?
Is that me?
Yes.
Yes, absolutely. I can start. I'm Monica Chakrai. I lead business risk and insurance for Google Cloud. I've been at Google for about 4 years, and by background, I'm an actuary my entire career in the insurance industry. So happy to be here.
Awesome. Helga, maybe we can go to you?
Yes, certainly. I'm here in my capacity as a cyber claims manager for Munich Re. I've been in that role for some time. I also have a role on some wordings and steering issues within our Cyber Centre of Excellence, and I'm very pleased to be here.
Thank you so much for being here. And Bob?
I'm Bob Parisi. I head up the production side of cyber for North America. That's
awesome. Well, welcome everyone. And Bob, I'm actually going to start with you. We've got two ladies on the podcast, but I'm going to go directly to you. We're going to start off with maybe the business side of cyber insurance. And one of the questions that I'm curious about is, can you maybe define for me how cyber risk insurance differs, for example, from property insurance? How are they different? Are they the same process?
Yeah, there a couple of things. One, cyber is the adjective, so cyber insurance is still insurance. What's interesting about cyber insurance and how it differs from traditional lines of coverage like property is that we have no statistical or actuarial data to lean upon. Even things like privacy breach and ransomware, which have now started to give us data that we can model on, doesn't really give us much insight because who knows what the next risk is going to be. You're also dealing with an environment that's constantly changing and evolving. So imagine if the hurricane could pick, or the tornado could pick which house it wanted to go after, or the flood could decide, I don't want to go here today. I want to go after those houses because they're not on stilts. That's what you're dealing with in cyber. It is a constantly evolving risk. It is a constantly increasing risk because digitization, as evidenced by how we're interacting today, is constantly increasing. So it, by definition, has to be fairly nimble and has to be able to evolve with the risk.
So if I were to double click on what you just said a little bit, do you feel that more folks are asking about cyber risk insurance today than they did a year ago? Do you have any statistics on, has it increased? Is it the same? Do people, when they ask for property insurance, do they also ask for cyber risk? Is it a matter of depending on the company size? Is it everyone?
Yeah, well, it's all of those. It varies by size. It varies by industry. It varies by what was the latest thing that they saw in the news. It's dependent upon whether their broker or their agent is, evolved enough to have started to talk to them about this. It's, if you take it back a step and you think about, well, who's got cyber risk? Well, cyber risk is the risk associated with, holding or handling data. It's the risk associated with being dependent upon technology. Unless you're selling fruits and vegetables by the side of the road, you've got cyber risk, and you've got it across a spectrum. So the fact that boards are looking at this now, the fact that regulators are starting to look at the company's risk profiles, the fact that the SEC is giving guidance, there's a tremendous increase and accelerating increase in cyber insurance That's probably exacerbated by the fact we just went through a round of what's referred to as silent cyber initiative, which meant the entire insurance industry looked at every other line of coverage and to make sure that they were not covering any cyber risk. So from the point of view of interest, it's huge. This is a business that's growing, 20, 35% per annum in the number of clients that are buying. Now, that again, rough estimate. I can speak only to what I've seen in the public, and I'm not giving you, specific Munich Re numbers. But yes, what we're seeing though, and one trend I think is worth commenting on, is that the growth has come not just from companies that you would expect, banks, retail, hospitals. It's now coming from companies like manufacturing, pharmaceutical. In line with your first question about how is this different than property, companies are worried about their assets, their digital assets. Companies are worried about their ability to function because the technology is not working. So now the buyers are looking at this like they look at their property buying, and that's changed the discussion.
So, and I'm not really sure. I mean, Monica, Helga, or Bob, who can answer this. So, how does it work with cyber risk insurance? For example, if I try to go get car insurance, there's some kind of a database that all insurance companies can tap into to get my driving record, how many accidents I've been, and that will dictate, my premiums and all sorts of things. Is that lacking? Is there somewhere where a database of some sort that could, I don't know, maybe score a particular company on, how many risk issues they've had, the types of practices they've had, their availability, etc., or is it on a case-by-case basis?
So why don't I just start, and then Monica, this is right in your wheelhouse. The quick answer, Eli, is no. There is not that database. There is not that predictive modeling. Which is why the underwriting for cyber risk is particularly challenging. We have to ask a lot of questions. We've got to look at, how a company is handling the governance of data. What's their digital DNA? There's no FICO score for cyber. Now, one of the things that we were excited about was the fact that, by partnering with Google, we were able to start getting a look inside the firewall, inside the systems, as opposed to constantly being outside, simply using a pen and paper exercise, just asking questions on the phone. And that was a and continues, I think, to be a game changer. So, Monica, I'll kick it over to you.
Yeah, absolutely. So Bob talked about it earlier from an actuarial and data perspective, but the insurance industry is predicated on this idea that data in the past will reflect, or incidents in the past will reflect the future. And as Bob noted, in cyber, that's not always the case. And if you don't collect the data of the past, or you don't collect metrics over time, you're not going to be able to start to drive those correlations of how risk indicates outcomes and what losses to expect for a certain company. You'll see in the industry right now a lot of firms that are doing outside-in scanning. So we can see what a hacker sees, for example, is a slogan that you'll hear often. And there is scoring done through those companies, but nowhere are we driving inside-out metrics and correlating that data and collecting that data with claims. There's no company in the industry that has both of those things, the losses and the indicators. And so that's what we're hoping to achieve with the risk protection program, which we launched through Google Cloud.
So Google has really taken pole position on this, in my opinion, at least. And folks, this podcast and the other videos are not sponsored by Google in any way, shape, or form. I just give them kudos because I find that amongst the cloud providers, they're really taking their needed steps in the right direction to go where we need to go. But so, Monica, I want to stay with you. Who's supposed to host this database? Who's supposed to be this independent broker that can feed the insurance companies and others, brokers and others, this data, this information? Who does it? Who's supposed to do it?
So we thought about this question a lot over the last couple of years, right? Ideally, if the data was readily available, you would see insurers hosting that data or collecting that data, the metrics coming in and then the losses coming out. That's how it happens, generally speaking, in other lines of business. Insurers can't get that data. And so a couple years ago, when we started entering into this space, we thought to ourselves, hyperscalers or cloud providers have a unique opportunity to really help the insurance industry. And by helping the insurance industry, we're helping our customers. And we're filling a gap that's existent in the market, where without the intervention or help of a cloud provider, it would be really hard to create an insurance market that's sustainable over time and that can help predict losses over time and that can protect our customers accordingly. So I would say that if you think about auto insurance, for example, that data is hosted by oftentimes insurers themselves. They'll have a device that they put in a company's car. It's a device that's unique by insurer, right? And collected that way. For cyber, I think that data is mutually between a cloud provider and the insurance company themselves.
So the data, in your opinion, will be distributed, right? And they'll be able to communicate via some sort of APIs to get information about a customer. So,
correct.
Okay.
Yes,
so,
absolutely. And just for clarity, just to be extra sure, it's the customer's data and it's their decision if they want to share it. So it's not a cloud provider just going out there and selling data or sharing data. It's the customer explicitly deciding that I'm going to use this data to better underwrite, to help insurers better underwrite my risk.
So since we're talking a little bit about Google Cloud, Google has the Risk Protection Program, or RPP, which is made up of essentially two components: the Risk Manager tool, which we demoed in part 2 of the Do You Need Cyber Risk Insurance? I'll make sure these things are linked in the description. And also the Cloud Protection Plus, which today is a collaboration between Munich Re, Google, and Allianz, if I'm not mistaken. What prompted Google to do this? And Google is essentially the only cloud provider amongst the top 3, at least, that I've researched that has really gone the extra mile to operationalize this, to do that. Why? Were you hearing this from customers? Was it a hunch? Why did you do this?
So I'd answer that in 2 ways. So with regards to, did we hear it from customers? Was it a hunch? What's unique about the Risk Protection Program team at Google is that it's truly cross-functional. You have insurance experts that, like myself, who have been entire career in insurance. You have security experts across the group through the Google Cybersecurity Action Team, Office of the CISO, product managers, et cetera. And early on through this process, the insurance side kind of raised their hand and said, look, there's a gap in the market and our customers are going to feel this even more as we continue to go down this path of digital transformation and acceleration from a digital perspective. So when we first thought about this, it was actually before the ransomware crisis or uptick. It was a few years ago, and understanding that if insurers can't properly model risk, which was our opinion at the time from a cyber perspective, they don't have the right data, this is only going to exacerbate the problem over time. And so that's what the hunch that started this from an idea to now what it is today. Today, it's a core pillar of our security strategy. So with this launch, we moved from this idea of shared responsibility, a shared responsibility model, which many people are familiar with, to a shared fate model, where we're not only going to help our customers have security by default, we're not only going to help them with blueprints, we're not only going to help them with security products and solutions, but we're going to go the extra mile to make sure that they're completely covered from an insurance perspective and connecting with the insurance industry.
So shared responsibility was all about technology, right? It's what you could remediate with technology. Shared fate is technology plus cyber risk to offload that risk, correct?
Correct. But it's also our ethos and the way that we think about how we partner with customers. So it's not just about providing cloud services. It's about going that extra mile, developing this partnership and product that Google's not selling insurance, right? The revenue from the insurance policy is going directly to our partners, not to to Google, but we went that extra step because we care about the security of our customers. And one of the ways that we think about this within Google is we're using insurance as an incentive to help our customers be more secure. So when they're applying for insurance, running that scan of their GCP platform, they'll know what to remediate before getting the insurance. So it's not just about risk transfer, it's about risk reduction.
And this is available to all Google Cloud customers for free, correct?
Correct. The tool is available to all customers for free. The insurance policy right now, through our partnership with Munich Re and Allianz, is U.S. customers with 500 million in revenue and above.
Is that changing anytime soon for below 500 million? Is there a reason why it's 500 million and above?
So I'll start on the second question. The reason why it's 500 million and above, at least to start, was because that market is a good testing ground for us. Starting with larger customers, we don't need to be at a place where the purchase of insurance is completely automated from A to Z. When you go downstream to smaller customers, you need a process where they can basically click to buy insurance. And from that perspective, there's a lot more integration and digital processes needed to get to that space. In terms of expansion over time, our goal is to expand this to as many Google Cloud customers as we can. So it definitely is on the roadmap and something that we're thinking about. But we don't want to be in a place where we're a distribution channel for insurance. We want to be in a place where we're truly changing the dynamic to help our customers. And so we're expanding in a very thoughtful way. Yeah.
That's awesome. Helga, I want to come to you because I've got a lot of questions for you. Most of my questions, or most of the questions that I got from friends and colleagues that knew I was doing this podcast, was revolving around claims. There's a lot of interest in claims. So there's always been trickery that's happened with insurance claims over the years in a variety of ways. So when someone files a claim, how do you assess or verify the validity of that claim? If someone says, I want to insure an application, and this application is generating $1 million a day for me, and then they pay premiums for a couple of months, and then they file a claim. How do you verify that?
Well, I think firstly, perhaps to explain, this insurance product is really quite a holistic product. So the insurance product itself, the cyber cover here, covers such a broad variety of different aspects of the business. It covers their first party, their business interruption. It covers their restoration of their IT infrastructure. It covers their business risk of the perception of an event having happened in that company. We pay for crisis management. And probably first and foremost, when a claim comes in, we're not thinking about what an application's worth. We're thinking about that crisis management stage, how to help somebody restore, how they're going to prioritize. And, we were delighted to partner up with Google, and we're also delighted now that Google have also purchased Mandiant, which for us is a great bonus because we have availability of Mandiant's tools, of Mandiant's expertise as, one of the gold category, if you like, of remediators here, to be able to work, we would hope, on a priority for our Cloud Protection Plus customers. So we're very much looking at those services first. If your application does generate $1 million a day, it may be that $1 million is very, very easy to see in your books. It may be that your $1 million a day revenue costs you $200,000 a day to keep running because of personnel, because of other issues. And your loss is, in that case, of course, the $800,000 a day. So it's a but-for policy when it comes to restoration, putting you back in that position that you would have been in if you hadn't had that difficult event. And we then, through that life cycle of a claim, and the claim has a set life cycle depending on what kind of event it is, through that life cycle, we then start to look at claims which may be made against you because customers are not receiving from you the services which you had promised, and or customers have had their data breached and you're having to communicate with external bodies, regulators, and customers litigation. So all of those things are covered in your cyber policy. It's a very comprehensive and holistic policy.
So when there is an outage, a claim, etc., you have technical teams that will actually do some of the investigative work?
We have our own technical experts in-house, and that helps us and guides us to help, if you like, the more classical claims managers understand some of this highly technical information. We also have access to highly experienced external experts. And in the case of Cloud Protection Plus, we will certainly be leveraging the relationship with Mandiant there.
So, Monica, I want to bring you in here. I'm not done with you, Helga, yet, but Monica, I want to bring you in because Helga mentioned this acquisition a few times now. How do you feel this is going to, and I don't know how much you can share, so I'm going to put you on the spot a little bit. How much do you feel that will shape RPP, or risk protection program?
So I can't speak to any concrete plans because it happened earlier this week. The acquisition was finalized, which we're very excited about. But I can say that to Helga's point, Mandiant has a ton of capabilities that could really help this product and process. So for example, when we're thinking about the tool and development of the tool over time and the process of sharing data with Munich Re, what we're trying to get after is what metrics have the highest likelihood of decreasing the frequency of a loss or the severity of a loss. And the threat intel and the understanding of risk and risk drivers that Mandiant has is extremely useful for that sort of analysis. That being said, we have many people across Google Cloud today that are security experts that are also very helpful in that analysis that we've been working with to drive that. So that's one area where there is a lot of synergy. And then the other area, which I think is very well known, is incident response and how Mandiant's a leader in that space. We already have Mandiant on the panel for the cyber insurance policy that we offer. So they're already engaged with us there. But lots of opportunity, and we're very excited about the acquisition, especially to underline our commitment to security and the security of our customers.
Okay, so I mean, one of my criticisms of Risk Manager today is that it's focused very much on just security. Does this acquisition expand at all? Like, does Mandiant have other capabilities to measure availability or other things, or is it again enhancing security?
So I would say the acquisition doesn't necessarily impact where we were going with the tool. So I'd kind of separate those two things.
Okay.
But when talking about the tool in particular, we're looking for drivers of cyber loss, right? From how does a customer get impacted from a loss perspective, liability perspective of anything related to cyber? And Helga mentioned this earlier. It could be an outage, it could be a data breach. There's a couple different drivers there. And so from that perspective, we're not just focused on security, but we do really lean in heavily to security. And Helga or Bob might be able to provide more context on the type of outage claims they see.
Oh, that's going to be one question for Helga that's coming soon for sure.
Okay, that sounds good, because once you do ask that question and hear it from Helga, you'll understand why we're driving a little bit more on the security front to start. But ultimately, we're looking at everything.
Okay. Bob, I want to come back to you. Typically today, who's initiating cyber risk insurance at the customer? Is it just the security folks? Is it the CISOs? Are you starting to see it maybe elevated more to the executive level, or is it the security team within customers that's kind of interacting, that's asking for this?
Yeah, I mean, I think as we start sneaking up on 2023, this is clearly a board level in a way that it hasn't been in the two prior decades. But what you're dealing with is many stakeholders inside a large organization. It's the chief privacy officer, it's the general counsel, it's the HR head, it's the CISO, it's the CTO, it's the CIO, it's the chief risk officer. There's a lot of it's a C-suite issue. So all of those individuals are looking at risk. If you look at any metric or any press release, I think the last one I saw might have been from the WEF, the World Economic Forum. I think cyber risk came in number 5, number 2 or 3 was climate change, and some pretty epic risks facing the world today. So it's on everyone's radar. But the fact that it's on the board's radar is particularly important from an insurance perspective, because the board deals with risk as operational risks, and what they typically do is they quantify it, and they look at how they are going to protect the balance sheet. And one of the ways they do that typically is through financial risk transfer, which is insurance. So it's changed not necessarily the focus of how companies deal with the risk at its core, but it's certainly changed the way they manage the problem. Bringing in a financial vehicle like insurance, as opposed to thinking just spend more on technology and the problem will go away.
Well, and Helga, just to come back to Monica's question, so I think I know the answer to this, but I'd love to hear if you've got any numbers or statistics or of the claims that you're seeing. Is security dominating these claims?
Security naturally dominates these claims, and it is the single most important aspect in reality. And the questions that we're able to ask for the Cloud Protection Plus product are really enhanced by having the Google information, because it's verified, it's tangible, it's not a view from one person filling in a form, or indeed from somebody else filling in the form for that small company or something. So having that objective information on the cyber framework of that company is really important. There are other elements. Naturally, human error can never be eliminated, and there will always be legal developments which put data in a different category, which will be a driver of claims. But I would be happy to say that by far the majority have a nexus with cybersecurity, and it's our single area that we can focus on to make a real difference.
I'm going to ask you a little bit of a tough question, admittedly. Feel free to say, hey, this is too technical. I'm totally cool with that. With car insurance, if you get into a crash, if you get into an accident, typically, and if both parties have different insurance companies, the insurance companies will typically try to figure out whose fault it is so that that other company could pay these claims. With cyber risk insurance, if there is a Google customer, is it the same way? Like, do you try to figure out whose fault it was for this security breach, for this outage? Was it the customer didn't do what they were supposed to? Was it Google's fault, and as a result, you go after Google's insurance, or does it work a little differently? In this area.
I'd like to say it works a little differently to that, to be perfectly honest. The customer's fault is largely covered by the policy, unless there has been a major misrepresentation of what their status is. And as I say, the objective information that we receive from Google is very good guidance from that. Google has within their tools the ability to identify if a matter was caused by a Google issue, and that would then be taken up voluntarily by Google. I don't really see this product as having a lot of conflict situations, in fairness. Where we may have a blameworthy situation is if a company that hosts separately our customers' data breaches it, they may have a contractual ability to recover some of their damages from that company. But I don't see the blameworthiness that we must attach to motor accidents, or that we used to.
Eli, one of the biggest problems in the wake of a technology failure, a system failure, a hack or a breach, what have you, is attribution. And what the cyber insurance policy does is respond to the loss. It responds to the crisis. It doesn't start with let's figure out who blew through the red light. It's we've got a company in crisis. We've got a company that needs to be not handled. It's a bad way to describe it. Needs to be partnered with to get through this crisis. And even in some of the larger breaches where you would assume, well, you got to know who's responsible or what happened. Often you're still left struggling to figure out, well, where did this come from? Was it internal? Was it external? Was it a nation state? Was it not? That question is often terribly difficult. So narrowing it down to one technology partner, let alone the actual actor or the actual vulnerability, can be difficult at times, and is by and large a moot point for the coverage. We're covering the peril, not the fault.
But so I guess my concern is with the rise of these cyber attacks, let's call them, and the large number of breaches. And I think there was a statistic from March that I quoted in one of the video on the year-over-year increase. That's also putting pressure and increasing prices, correct? In insurance prices for cyber risk because of how much it's happening, correct?
I wouldn't say it's necessarily the fact that there are more breaches. I think it's probably, if I had to attribute the increase in price to anything, yes, you can obviously point to the increase in ransomware. That certainly was an impact on the market. I think the larger piece, though, is that the inherent risk in and of itself has increased dramatically. The digitization of the world's economy has increased dramatically. This coverage started in 1999. Think about how you utilized technology in 1999 versus how you utilize technology in 2023. I didn't have a smartphone in 1999. I don't think anyone even used the word cloud. We certainly weren't saying ransomware. So the sheer pace of technology has increased the risk. And now we're starting to see people focus on things like lost revenue due to technology failures, digital assets being bricked and having that have to be recovered and insured. So the coverage has increased dramatically in the two decades that it's been around. We're now seeing the pricing catch up and align with what the risk actually is.
I want to just double click on this because it's fascinating to me just a little bit. What happens to Munich Re and other insurance companies when you're faced with a lot of claims? So, for example, a hurricane hits the U.S. Insurance companies, they feel it. Paying out these claims is sometimes incredibly difficult, right? So imagine a scenario where there's a broad cyber attack that impacted hundreds, maybe thousands of companies. Have you modeled this type of a scenario, and how would you address it? Is it just pay out everyone and help them get back on their feet? Are you also reselling tranches of this insurance? Like maybe a little bit on the back end of what you guys do, the operational part of it.
Yeah, that's a lot of inside baseball in that question, Eli. First I would say, Munich Re has made the statement that, you can't call yourself a property and casualty insurer if you are not offering cyber insurance, solutions to your clients. And our general model is not if but how. So, while I would like to say we are totally prepared for the cyber hurricane, I don't want one. I'm hoping one doesn't happen. But we do model to try and avoid things like systemic risk and aggregation across our portfolio. But that being said, and I kind of jump to your last question, if someone has a Munich Re policy and it's and they have a valid loss, we're going to pay. That's just who we are. We're not going to try and say, well, we paid a lot, so tough luck. If it's a valid claim, if it's a valid loss, Munich Re is going to pay the claim.
Yeah. And Helga, have you seen disputes that have reached the legal system, the court system?
Certainly, but I think maybe I can just add, if you don't mind, to Bob's answer, because the widespread event that we're talking about is obviously first and foremost a management issue for claims to help those customers get back online. And what we have built into our claims response here is different ways of being able to access additional resource so that those customers will still get, a very good level of service. Because access in a very, very widespread event, access to experts could be compromised by people who don't have cyber insurance in place. So having the cyber insurance is great, step one, and having this product where we're able to leverage external providers as well and external resources to help us with claims is also, it's a great benefit to those customers in the event we have Bob's cyber hurricane. But disputes, we do have
trending on Twitter, Bob Cyber Hurricane, please no. But Eli, I think one thing to also note is while Helga and I focus largely on large single risk, Munich Re does also participate in Main Street or High Street companies, insurance, middle market, and one of the kind of cool things about the insurance for the smaller companies, the SME space, is a very holistic loss prevention, loss assistance, loss management, mitigation, use whatever analogy or word you want to, that helps them through this process. It's they have an event, a shiny red fire engine comes and puts out the fire, make sure they've got the healthcare that they needed. That's a different buying pattern than, say, a large multinational, which knows how to weather the storm on its own. So the cyber insurance community is looking at every aspect of the economy that might get hit by that generically named hurricane. So I think that's one of the things that's unique about cyber insurance. It's not just responsive; it also looks to be preventive and to mitigate the likelihood of impact.
Yeah.
Excellent.
One thing I'd add is something that I found interesting is when you talk to small companies and you work with them through this space, their cyber insurer is often the first person that they call, right? And so although we provide incident response services, et cetera, there's a stronger relationship there as you go downstream. And it really is a driver of global cybersecurity risk reduction over time.
So Helga, back to the legal question. Have you seen issues reach the courts, and are the courts even prepared? Do they even know how to deal with cyber risk insurance?
Yeah, well, those are two questions that have a multitude of answers, I guess. I would say, in my experience of what I've seen in terms of disputes which have already reached the courts, it's been primarily on coverages which are not really a cyber affirmative cover. So we've seen some disputes reach courts where somebody has purchased a property insurance which has a small cyber element, which in some way perhaps did or did not intend to deal with that kind of issue. So that's where the main disputes have been. And there will always be a great uncertainty if you're the customer who has planned to buy cyber as part of a non-affirmative policy. There is inherent risk in that. The cyber affirmative policies in all of the major events that we can name so far have actually responded very positively and without significant dispute. So I think overall, we're still in a good way in terms of affirmative cyber. Non-affirmative, if you like, where the cover is, we would call it silent cyber, where there is an element of cover, but it wasn't the main coverage of the policy or the intent. That's always much, much harder. And it makes it harder for the courts. So coming on to the second part of your question, with regard to, are the courts able to deal with that? Courts are always able to deal with insurance matters. They've been dealing with insurance matters for many, many years. There are dedicated commercial courts and such like as well that will hear some of these issues. I think the difficulty is that in some locations, you may have to go through more than one court until you get that sophisticated, business-focused response that really understands how this cyber incident has impacted that business. So it may not be as quick as we would like it to be. So our aim is to make our policies clear, make our responses clear, and to act within that to avoid that. Because the last thing you want is a customer having to wait a very, very long time on an answer if something is covered or not. And we have seen that with some of the non-affirmative coverages recently. And, I think from my point of view, and it relates to elements of claims, companies only remember what they didn't get back from an insurance company. It's very hard for them to remember what we did pay for. So if we can avoid a dispute by having that clarity up front, it's much better for us.
And
excellent.
maybe
Yeah,
I
go
can
ahead.
underscore one of the things that Helga says. As someone that's an insurance person at a tech company, I'm constantly trying to explain insurance to non-insurance people. And the way that I explain it is that insurance is like a puzzle where every different puzzle piece fits with the other policies. So you'll have policies that exclude a certain thing because it's supposed to be covered under another policy. And so what Helga's outlining, just said in a different way, is that a lot of the reputational issues with cyber insurance that have happened to date are because property policies, casualty policies, other policies had an exclusion for cyber, and customers didn't buy cyber and tried to get the coverage there. And so I think it's really important to highlight, because if you're not in the weeds of the insurance industry, you're going to see the headline of big cyber attack wasn't covered. And only until you really understand the nuances of insurance will you uncover that it wasn't even a cyber insurance policy to start with. And it's, just an important thing from a reputational perspective for the industry.
So, Monica, I want to stay with you. Today, I've been an advocate for a long time that the major cloud providers, the hyperscalers, are definitely competing, and they should compete, and that benefits customers and benefits the industry and keeps everyone innovating. Kind of the same situation that we're in today, where Google Cloud is truly innovating and taking the lead as far as cyber risk insurance. But I also am an advocate of co-opetition. I do feel like in some areas, the hyperscalers need to have some level of communication. Microsoft's doing really well with their partnership with Oracle and connecting regions and stuff like that. I'm curious with regards to this topic, and I don't know if you can even tell us this or not, but is there any level, low level or high level, of conversations happening between at least the top three to collaborate on cyber risk?
So I would say to date, not that I can speak to. I think you're starting to see interest in other cloud providers in entering this space through smaller partnerships that are emerging over time. But as of now, there isn't a strong collaboration between the three on this front.
Well, I'm going to take this opportunity. Yeah, please go ahead, Bob.
Yeah, Eli. I mean, there is, however, a substantial amount of sharing across industries. So, there have traditionally been what's referred to as the ISACs, the Information Sharing Associations, I mean, there's FI, there's tech, there's pharma, where the CISOs and the chief risk officers will share their trials and their tribulations around information security. So there is that, and that exists, and that continues to this day.
Yeah, I agree, but my thing, and I'm going to use this as a pivot point to invite the other hyperscalers, to invite everyone, actually, the top three at least, to collaborate on this topic, because I feel like with the amount of organizations that are hosted on AWS, Azure, and Google collectively, it would be amiss for them to not be able to, at some level, integrate, share, help push this forward. Because as we saw in part 2 of the video, and Monica, I'd love to get opinions here, the application process has been difficult. It's long. It's yes, no, with some commentary. So Google has done a lot to help this, but again, it's not enough. So I'm going to put you on the spot again and ask, what's coming? What can we expect more from Risk Manager, from the program in general? Is it going to be open to scanning other environments outside of Google Cloud, maybe on-prem, other clouds? What's coming? Can you share?
Yeah, so I mentioned earlier that what we're looking at with the tool is what metrics and how can we best drive down cyber risk for our customers, and what metrics best predict that risk. And so our focus continues to be there across the board, whether that is on Google Cloud or otherwise, trying to understand how to prioritize that the metrics across the board for our customer and drive that forward over time. So nothing I can definitively point to, but it is an area that we're looking into. The other comment I'll add real quick is that when you think about another hyperscaler getting into this space, I look to the investment that Google put into this space over time. So it's not an easy partnership to just start out of nowhere and launch. It required a lot of time, a lot of dedication, a lot of in-house expertise that was both across from an insurance perspective and a security perspective across Google and others, and a willingness to think outside of the box. Without those three things, I think it would be really hard to get this through. It fit with our company culture, and so it was a good fit for Google, but it's definitely an investment that we've made for our customers.
Yeah, I can talk to you all for hours, but unfortunately, we're going to be running out of time pretty soon here. But I want to try to see if I can bring it home with two final questions. And I'm going to start with you, Bob, but I'd love to get everyone's perspective on this. Do we feel that we need legislation to mandate, to make it a requirement for every organization to have cyber risk, or is that going too far? Is it happening kind of naturally? It's just a maturity thing. I'd love your opinion on this.
So, no, it's a great question. And if you had asked me 20 years ago when we're selling it for the first time, I'd say I'd love some legislation. Because it was, there was a lot of time in the wilderness trying to convince people that this was a real product. I don't think we need that anymore. I don't think we don't need to make this the next workers' comp or auto insurance. What is more helpful is what we've seen in New York with the financial regulator creating standards, with the SEC providing guidance around reporting, with boards taking recognition that this is something that is material if you're a publicly traded company, and you have to basically treat it as any other material issue if something happens. That type of regulation, that type of legislation is frankly more powerful than just simply mandating you have to buy. Because if you have that legislation, you must buy legislation, you will have everyone kind of race to the bottom, and they will buy the minimum required insurance. By having this become an operational risk and having companies put it into that thought process, they're in the enterprise risk management, what have you, they look at it from what truly is our risk. Let's measure it, let's monetize it, and let's deal with it in the way that we see best fit for how we deal with that type of risk. And I think that promotes a a deeper look, a deeper self-awareness by companies than just simply saying, here's the legislation, you have to buy $100,000 worth of insurance and you satisfy, because you will have everyone race to the bottom.
That's fair. Monica, as far as Google Cloud is concerned, do you foresee, and again, hypothetical question, I'm not going to hold you to it, but as Bob was talking, in my mind, I couldn't help but think it would be interesting for Google Cloud customers to log in on the dashboard, and those that didn't have cyber insurance for it to flag, hey, you haven't subscribed, or you don't have cyber risk insurance, consider it, or some kind of a message that they don't have it and that it's available. Is that something that is being considered?
Honestly, knowing the industry and knowing the complexity of how things are done, at least currently within the insurance industry, that would be a very big ask. And the reason that I say that is that insurance, any insured, any customer of Google Cloud could have insurance through a multitude of different companies. And so if Google were to ever design something like this, and all of this is hypothetical, right? We'd have to integrate with the entire insurance industry and have a technical integration with an industry that, although Munich Re has been excellent and a leader in this space, the industry as a whole is not very tech forward. And so that sort of concept would be difficult to achieve.
That would be a very big undertaking. I was mostly referring to, for those that maybe haven't taken advantage of a risk protection program, so through Google, because that would be easy for Google to figure out, you're a customer, but you don't have insurance, and as a result, we're going to flag it for you that this thing is available to you. And maybe they have it and they can discard it, but at least it'll be something that pops up that based on our information, you don't have cyber risk insurance.
Yes, that doesn't currently exist today, but if we were in this partnership, for example, with Munich Re, to integrate them from a technological perspective, I think it's possible that those who bought insurance through the program would be able to see that through the tool. The other thing I might add is on accumulation risk and the conversation about legislation in this space. If you zoom out and think about the insurance industry as a whole and think about other lines of coverage, the government intervenes when a loss is or a peril is seen to be as uninsurable. So there's too much catastrophic risk with Bob's cyber hurricane, for example, where everyone's going to be out at once, right? And from a capital management perspective, an insurance company cannot hold enough capital for that sort of an event. And when thinking about legislation, rather than thinking about it as perhaps the government can enter this space as mandating cyber, I would think more about, is there a type of catastrophic loss where the government can help define what that is and step in as a backstop to insurance companies to give insurance companies the confidence to continue to write that risk. And ultimately, that makes our entire society more resilient if insurance companies feel that they can cover it. And then you have a process by which to get coverage for a big event. So just thought I'd add my 2 cents there.
Yeah. And Helga, I'm going to go to you with, give me one pro and one con of cyber risk insurance from your perspective.
Well, I think cyber risk insurance really does create a safety net for companies. I think companies that buy cyber insurance, they're getting good feedback, they're increasing their resilience, they're having to prove that they're conscious of their risks in order to get insurance now. It's quite competitive to get it. So I think we're serving a great purpose. We're smoothing out the business loss for people, but we're helping them improve their cyber resilience as well.
I have to ask this question because it just, as you were talking, it just popped into my mind. Are you being more selective about who you extend insurance to, or is this open? Anyone can.
No, I'm going to take issue with your adjective. We've always been selective. We're not being more selective. I think one of the nice things with Google is we get more information, and we can make more more informed decisions. One of the biggest issues that you hear at cyber insurance conferences is the issue of sustainability of the product. And I think the critical thing to sustainability of the product is more information, is data, but also data that is usable. As Monica said, it's one thing to know, well, there were 82 ransom events. Well, all right. Well, where did that ransom event come from? What vulnerability did it exploit? What about the 9 companies of the 90, of the 82 that got hit? 9 didn't, get impacted by that same ransomware. What were they doing that allowed them to basically be unimpacted? It's getting usable data that actually is instructive to loss metrics, and that's what we're really striving for, to move towards that. And that's, again, not to continue a little bit of a commercial, but that's what Google is helping us work towards.
Yeah,
but we remain selective, Eli.
That's fair. But for those companies that can't get insurance, is it just we can't extend insurance, or is it you need to meet X, Y, and Z?
Yeah, I would. Yeah. So, I apologize for interrupting. I'd say what's always gone through my head with cyber insurance, because we lack the actuarial data that Monica referred to. There's no right rate for a bad risk in insurance. The companies have to show a certain amount of philosophical embrace in their digital DNA. They have to show us that they are a resilient company, not just a secure company. So if I see a company that comes to us and we don't like the fact that how they're configuring their networks, or they're not using multi-factor authentication, if they are fumbling so fundamentally, I'm not going to offer them coverage. And I would say that's a fairly common position in the marketplace. One of the nice things, one of the pros, but you didn't ask me my pro, was I do think cyber insurance has helped raise the discussion around what is the right amount of digital governance, what is the right amount of cyber risk management. I don't presume to think that we are driving the discussion, but I do think we have a seat at the table, and we are contributing, and really just from a simple self-awareness, helping make the board more aware automatically makes a company a better risk. If the board is thinking about this, people respond and people act.
I agree. Monica, I'm going to close with you. I want to hear your pro, your con, but I also want to see a vision. What is your aspiration? Where would you like to see this industry? Where would you like to see the risk protection program in 2 years?
Yep. Okay. I'll talk about high level vision, won't commit to a timeline.
This is Monica's vision. So I'm not holding, this is not Google. I'm not holding you to it.
This is Monica's vision. Yeah. I think we can get to a place where I'll say 95%, just because we have Munich Re on the call, but we can get to a place where 95% of the underwriting and the pricing process of a insurance application is digitized, where you log into your Google Cloud Console, you click a button, and you're able to get an entire application filled through data-driven underwriting, and that is sent to insurance partners, and you get a quote. I sometimes immediately is hard to say for larger companies, but you have a very quick turnaround, and it's a digital, easy process. So just like we've seen the auto insurance industry go from a very older model to where you had a PDF and you wrote how many miles you're going to drive, to a place where there's metrics in your car, I think the cyber insurance industry is going to go on that path, and it's just a matter of time. And ideally, cloud providers can help accelerate that journey.
I'm going to do a pound data-driven underwriting. I love that. And definitely pound Bob's Cyber Hurricane. Hopefully those two will trend on Twitter. Monica, Helga, Bob, I sincerely want to thank you for taking the time to join us today. I think the information was invaluable. It was amazing. I learned a ton. Folks, I hope you enjoyed this episode. I hope you were able to learn a lot about the insights, what's going on in the background, the state of the cyber risk insurance market. If your organization hasn't looked into it yet, now would be a really good time to start thinking about this, to start having these conversations as the world is moving more towards digital, as more of the world's GDP is reliant on the digital economy. We have insurance for everything, so cyber risk insurance has got to be one of those things that we add to the list as well. Thank you so much for everyone. Thank you for our guests, and we will see you next time.
Thank you so much, Eli.
Thank you. Bye.